All right, so welcome, Rajiv. It's good to be here to talk about recent developments and about our Q2 progress. Before we dive into the quarter, however, let me just ask about the private equity situation in our parent companies. And are our parent companies still really committed to NSN?
I believe the support from our parents is stronger than it has ever been. I think we need to be honest and acknowledge that we have not always given them reasons for confidence with our past performance, and particularly in 2009. In fact, we have let them down on more than one occasion. So they've had very fair reasons for skepticism. Today, however, I believe they see the opportunity again. And as we went through the PE process, they got a deeper view of our progress and our transformational ideas for the future. They have reaffirmed their support, but let's be clear, it will not continue to be there if we don't deliver. That is just a fact of life. So we must deliver.
Yeah, no, understood. So why did our parents say no to private equity, and do you think that is good or bad for us?
Well, they said no to private equity because they saw the opportunity and decided they could create more value for themselves without PE. It is really as simple as that. Do I think it is good or bad? Well, overall, I think it is positive, as it now allows us to move forward with our plans for the future, with the next phase of our turnaround. It is an opportunity for us and one we need to take full advantage of. It is also good for us as our customers were clearly apprehensive of a PE-controlled NSN.
Sure, okay. So on to Q2. What do you make of our Q2 results?
I think our second quarter results told two stories. The first about the remarkable progress that we have made and the fact that we have stabilized our business. The second, though, about how we need to now move from this stabilization to transformation. While we're entering a new phase, our turnaround is far from complete.
So let's come back to that in a moment, but let me first just ask about some of the basic numbers. How about just walking through some of the core numbers of the quarter?
Sure. We had sales of 3.6 billion euros, about a 20% growth compared to 2010 quarter two. Even if you exclude Motorola, we grew by 12.6 percentage points. Our gross margin was down a bit from Q1, which is extremely worrying for me and remains about 10 percentage points lower than our competitors. And this we must fix. Non-IFRS operating profit margin overall was at 1.3% and 1.7% for NSN standalone, which is very much within guidance, but at the low end of the range that we gave at the start of the quarter. The Motorola part of our results were negatively affected by accounting harmonization changes between US GAAP and IFRS and some other changes that were needed to comply with the NSN guidelines. Our net loss, which is truly the bottom line figure that shows our true impact to shareholders, was 255 million euros, given interest and tax charges, as well as special and one-off charges, including charges related to the planned WiMAX and GSM Horizon restructuring.
Okay, and how about cash? How do we do on the cash front?
Concerning. We had a large cash outlay for the Motorola acquisition, which of course we planned for. At the same time, though, our operating free cash flow was negative. Now, not everyone understands that you can lose money but still generate cash. But that is possible, and for us, very important. We need to generate positive free cash flow if we are to keep the support of the banks that we rely on, and especially for financing and customer guarantees.
Got it. So let's jump back to the comment you made on kind of the two stories of the quarter. And tell us a little bit more about what you meant by that.
Well, first there is the story of our progress, and I really want people to feel proud of this. I know we often look at the areas that need to be fixed rather than celebrating our achievements. But the reality is that we have stabilized our business since we launched the turnaround at the end of 2009. While our success has been greatest in driving for growth, also consider that in Q2 of 2009, our sales were falling by double digits. In fact, much of the year in 2009, that was the case. In Q2 of 2011 and Q1 2011, they grew by double digits, our fourth consecutive quarter of growth. We have shown outstanding growth in our priority markets. No doubt about that. Not just Japan, with its stunning standalone growth of 155%, but all 6 others as well, adding up to 41% growth in total. We have now delivered 6 non-IFRS operating profitable quarters in the last 7. Now, while this is progress, many of these were very slender profits, and we need to do a lot better on our capture value priority. Our business units, they are delivering the right areas. Mobile broadband, customer experience management, and services. Our 3G business, Stellar, was up a massive 31% from the previous year. Innovation is back. We need to do more, yeah, but we're winning the right deals. We're innovating, and I could go on and on. But from this perspective, we are a growing and vibrant company. We're an innovation engine leading the industry, a company with momentum in the world's most important markets, and a company clearly recapturing the confidence of customers across the globe.
Now that all sounds remarkably good and like remarkable progress, but as you said, there's another story.
There is. And that is the story of a company that had 500 million euros of net losses in the first half of 2011, and that is still burning cash. If you look at the scorecard, there is red in a number of areas, particularly profitability and cash. The numbers I shared for our profitability at all levels, non-IFRS, IFRS, net profits, are simply too low. Pulse survey results on reinvigoration focus areas are, to be frank, depressing to read. Quality is not where we need it to be if we are to really delight our customers. Cost performance is, yeah, okay, but not great. And we continue to spend too much money on products and services that don't produce and will probably never produce adequate returns.
So now that's quite a list of things to tackle. I mean, how do you see it that we need to get more traction in those areas?
We move to the second phase of our turnaround, transformation. And as I said, when we announce the end of the private equity process, we will announce more details on what this will look like by the end of the third quarter. We're clear on what the issues are. We know we have to tackle capital structure, organizational efficiency, costs, and prioritizing our R&D spend. Now, as I say them, they sound really simple to do, but in reality, they will require some huge transformational changes.
Clearly they do, and I have to ask, I mean, don't you think people are frankly just tired of all the changes?
Yeah, well, I think the answer is both yes and no. People are tired of constant reorganization, to be sure, but they're also clamoring for certain kinds of changes. So as I talk to our people around the world, there is a clear understanding that something has to happen. Something's just got to give. We have a lot of smart people, and they see that we still have more work to do, that we have to tackle some of the structural weaknesses that limit our future. You know, I was fascinated, Barry, reading through the comments on the e-blog about the end of the PE process. Plenty of comments said, basically, enough with the changes, we need some stability. But plenty of others said, we are still too complex, that our matrix structure removes accountability, it adds complexity, that we are trying to do too much with too little, and we need to focus more. So I think people will support changes that really improve their ability to work effectively and serve their customers well.
Yeah, and I certainly would agree with that when you look at the e-blog comments, which, as you said, I think were really quite remarkable. Let's look ahead to Q3, and our guidance for Q3, frankly, looked pretty weak to me, at least on the profitability side. What's going on there?
So, just so everyone is aware, we said we expected sales in the range of 3.2 to 3.5 billion euros and non-IFRS operating profit margin of -3% to 0. So the sales side is fine. Even if we deliver at the low end of that range, we will grow compared to the previous year. It is the profitability that is concerning, hugely concerning. I expect we'll do better than the -3.8% from Q3 last year, but the reality is that we are forecasting a loss, and that is not good. In fact, it is totally an unacceptable performance.
So what can people do to help with that?
Don't give away value. Do not give away value. Think about the fact that Alcatel-Lucent and Ericsson deliver gross margins that are roughly 10 percentage points better than ours. They face the same Chinese competition, the same cost pressures, the same need to maintain share and scale, the same relentless customer procurement processes that we do. Yes, they get the advantage of the investment boom in the United States in a way that we do not, but that does not explain the whole difference. This situation should hurt our pride, and this should push us to do better. Let me ask, are our products 10% worse than Alcatel-Lucent or Ericsson? Absolutely not. And in most cases, they are better. Are our people 10% worse? No way. The people of NSN have shown that they can out-execute Alcatel-Lucent and out-innovate Ericsson. We cannot let this situation stand. We deserve better, and we need to fight more to deliver better.
Yeah. So speaking of Ericsson, I mean, they announced their results just this morning, which is a little bit unusual that they announce before we do. What did you make of those results?
Well, overall, their performance was strong. Despite missing consensus on operating profit, their sales were up 14% year on year, so slightly ahead of our standalone performance. Gross margin at 37.8% was well ahead of us, and that remains the heart of our challenge. That's the story of NSN. Underlying these numbers are some interesting data points, such as year-on-year sales in North America were down by 6%. Their cost structure in terms of sales, general and administrative, and R&D is actually slightly higher as a percentage of total sales than ours. But their very strong gross margin allows them to cover those costs and still deliver a decent net profit. Their global services segment was down 5%, although they attribute that largely to currency issues, pointing to flat performance in local currencies. Still, one has to say that these are good results in a tough industry.
Yeah, you have to give them some credit for it. Let me ask you a personal question. I mean, we've all been working very hard for years since the creation of NSN, and while we have improved for sure, we still have so much more to do, and our results aren't where they need to be. Doesn't that get you down at times?
Well, I guess I would not be human, Barry, if I didn't get down at times, particularly when we have to take actions that impact jobs and the lives of our people. But the vast majority of the time, I am both upbeat and optimistic. I do not believe in sugarcoating things or living in a state of denial. And I know we have tough challenges, but I also know that our success is almost entirely in our hands. It is about what we do, the choices we make, the leadership we show. Our destiny is really in our control, and that fact makes me optimistic.
Okay. So I think good to hear. Any last words?
Yes, my guess is that the message that we would have to address our challenges seriously and to seek out and identify the required transformational steps by the end of Q3 will make some people nervous. And I understand that reaction. It is simply human. But what should make people really nervous, though, would be if we fail to transform. It would be if we stopped our turnaround now. In our industry, at this time, you change or you die. I, for one, chose change. And I know that many others do as well.
Excellent. So Rajiv, thank you very much, and thanks to all of you for watching. I'd like to leave all of you with a challenge. If we do better than break even in the third quarter, I will volunteer to shave my head on video. So I will do my Christian Fredrickson imitation, and you can all watch it and get a good chuckle. So it won't be pretty, but we'll try it anyway. So let's see what happens. But let's please push for better than break even performance so we can keep up our string of profitable quarters. As always, we look forward to your thoughts and your ideas on the e-blog. And thank you and have a good day. And let's go deliver a good third quarter.